Unfortunately, folks, the pain that we have been warning about for the last year is starting to get real. I am personally hearing more and more from limited partners in syndications that have had distributions stopped, which is not uncommon. But now what I'm hearing about is the dreaded capital call. So I want to talk with Mr. Jonathan Twomley about how does the pain ratchet up? How do you might know you have a good operator or someone that is desperate? I think there is, frankly, a lot of pain still coming. And I think it was John Green is a billionaire that said we're in the first inning of this. So again, I think there's a lot of pain coming. So let's educate folks, Jonathan, on how the pain might get ratcheted up for a syndicator that is in a bind, if you will.
Yeah, well, I think, the first thing that, like you said, the first thing that's going to happen is the money stops coming to you, right? So when you get the email that distributions are being paused, that's sort of like the first cause for concern. But let's sort of put some parameters around that, because just because you get an email saying that distributions are paused doesn't mean that the worst is coming, right? So I don't want you to get freaked out. You definitely have operators, and I'm partners with some operators like this, who are very cautious. They're really like, they've gone into the like, let's make sure this doesn't become a problem mode, right? And they just want to preserve cash because they know that when it comes time to have to either buy a new rate cap, for instance, or refinance the deal, and there might be a cash in refi, they don't want to be doing step number 2, which is going for a capital call to their investors, right? So there are people who are really performing the asset management function properly by doing something that's painful, i.e. stopping distributions, but they're doing it for a good reason. They're not doing it to fund operations. They're doing it to preserve cash for some eventuality. So what you would want to really dig into is to find out why they've paused distributions. Is it because they are building a cash position? That's good, right? That's protecting your investment. And if you have an operator who's doing that, I'd say, you're with a good person. Because if the reason that they're pausing the distributions is because, they had variable rate debt, their debt service is going up, they need to pay for it, and they want to preserve cash for a future rate cap, that's a good enough reason. However, what you need
Now,
to do,
let me ask you a quick question. Now, it's probably, again, very different operators and deals and all of that. But part of what's going on with these, what I'm calling financial engineers who are blowing up left and right, is they are good talkers or good marketers. They probably know that that's the message that the LPs want to hear, I am guessing. So if you're an LP, do you get a look at the balance sheet or the cash reserves or what?
That's where I was going with this, right?
Oh, cool. Okay.
Yeah. So the second reason that they might be doing it, however, is because their operations are really screwed, right? Or they're not making their debt service or whatever, right? So you want to kind of dig into this a little further, and you want to have a look at the operating statements. Now, some operators send them out every month. Like when I sponsor my deals, I forward, the operating statements, right? So, but some people don't. Some people say, you're allowed to get them, right? If an operator tells you you can't see them, that's a big problem, right? Because you should be able to see them. It's, they have a fiduciary duty of providing information. So if they
that's probably a good question, because I'm envisioning financial engineers under an increasing level of stress. They've already had the email out about stopping distribution. It's got to, they tried to squirt it with enough perfume to make bullshit smell good. Yeah. Now if we help people understand to go poke at the operating statement, if they can't get them monthly, I got to imagine they could get them quarterly. And
well, they ought to be getting something. The fact of the matter is that you have the right to get this information unless your deal documents specifically say that you can't get it. And I can't imagine anybody putting that in their deal documents. It just wouldn't pass the
Wouldn't
sniff
be.
test, and anybody who had their lawyer read it would say don't invest in this. But who knows? Like, who knows what's going on out there?
Yeah.
There may be deal documents out there that say you're
It
not
was
allowed.
so hot that they got anything past mustard, right?
That's what
When
happens.
risk is
That's what
zero,
happens in a
yeah,
bubble, right? People will literally
do
agree
silly
to anything,
things. Yeah.
right? So, but anyway, so here's what you want to look for, right? You want to look at the operating statement and the balance sheet, and you want to look for two things. On the operating statement, you want to be looking at whether the deal is making a profit on an operating basis, right? So you want to make sure that there's positive NOI, right? That's the first thing. That tells you that, well, they're at least operating at a profit. The next thing is you want to make sure that they're meeting the debt service, right? So sometimes that's included on the operating statement, sometimes not. It should be on the ones that you're looking at, but it's a little bit tricky when you look at it, because oftentimes with GAAP accounting, that only the interest is reported, not the whole
Right.
debt, right? So it looks like, hey, we're making a big profit here, but hey, where's my money, right? So you need to ask them, essentially. So you see profit, that's good. You see interest payment being made, that's good. But if you can't tell how much the total debt service is, ask them, and just
Yeah.
make sure that the debt service is being covered, right?
Yeah.
So, and as long as the debt, I mean, frankly, like, nobody wants to hear that they're not getting distributions or they're not going to make a profit. But at the end of the day, like, the worst case scenario is debt service is not being covered. So if the debt
Right.
service is being covered, like, okay, you can survive, right? You can just run this string out until things get
Yeah. Delay, right? You're buying time.
right. So, and as long as you're making your debt service, you can buy time. All right.
Okay.
That's the important thing to remember. Maybe you're not going to make as much money as you'd hoped, but you should be fine. Then the other thing is you want to see is you want to look at the balance sheet,
Mm-hmm.
and you want to see that cash balance building up. If they're telling you we're doing this to preserve cash, well, then you want to see the cash building
Yeah,
up on the balance
exactly.
sheet, right?
Yeah.
So, and if you see those two things, then okay, you can probably
Well,
take.
let me ask you one more question because I love all of that. The other thing that and again, I'm not in any of these. I'm just, just playing with what my experience is. I think I would want to know the term of the loan. Like, when is that coming up?
Well, I mean, so usually most people put this in their original offering memorandum,
Okay.
right? So they typically will say, we got a 5-year note, and it's this interest rate and whatever. So you might not know the exact starting date, but you can remember you can probably go back and figure out what the closing date is and then just calculate it yourself.
Yeah. Okay.
Right? So, and if again, if not, just ask them what's the remaining term on the note. You can ask them what is the interest rate that they're paying now. Some people are very upfront with exactly what's going on at the moment, and they're saying like, hey, we hit the rate cap, we're paying the maximum interest right now, right? So that is what you want to look for. Um, the the thing, I guess, sort of, when you ask me like how you're dealing with a good operator or not, usually the tell is pretty simple. Like, are they telling you bad news without you having to ask for it or not? Right?
Exactly.
If they're upfront and they're just telling you, hey, look, this sucks, but this is the situation, then you're dealing with somebody who is good. If you're getting excuses, if you're getting, if you're getting everything is fine, or we're on it, don't worry about it, it's going to get like that
Yeah.
kind of stuff
Yeah.
is,
Yeah. Unicorns and rainbows. That's not
yeah,
good.
is kind of is a tell that, like, things are not going well.
So
So, but
let's
yeah,
talk about these financial engineers because again, it is clear, and the real deal is reporting more and more stories of this, and we're going to see more and more operators go to jail because of bad fiduciary duty, taking money from A and B and commingling and all that stuff. But as an operator, you really have a couple of choices. You're staring at a rate cap expiring or interest rates rising. You're doing a value add because heaven forbid everybody was doing value adds with IOs. I think you have two choices. And I honestly don't know what the right choice is. A, do you slow down the value add so you conserve cash, keep units full just at a lower rent to kind of survive to 25, or do you step on the gas, increase vacancy in the short term, deploy capital improvements, and try to get the higher rents, thus, in theory, making NOI look even better in the short term? I don't know what the right option is, and I don't know there is the right option, but those are the two things that I see.
Yeah, I don't think there's any like one size fits all answer here, right? I think it depends on a lot of different things, and it's probably deal specific. And if you're an operator, you have to look at what your cash position is now. Like if you were doing a big value add, for instance, hopefully you raised a whole bunch of money to do that. You have a whole bunch of money in the bank, right? Or maybe you finance it and the bank is still willing to give you the money. I mean, that's another thing. Like, is the bank like, did you raise the money on your own to do your renovation, which is what I like to do because it gives you more control, or did you get the money from a lender, right? If it's the latter, is the lender still willing to give you that money or not, right? So you may not have a choice if you went to borrow it in the first place. On the other hand, the lender may be pushing you to who knows? So we just don't know what the inside conversation is there. But let's just say all things being equal, let's say you raise the money. So you're not dealing with the lender, you have the choice. Now, what you have to look at as an operator is, okay, how well have we been able to execute so far? Like, do we have crews that are here? Like, are we suffering delays? Like, are these guys good? How fast can we move? Or not? And also, like, on the ones we've done so far, are we getting the rent bumps that we thought, or something close to that, or enough to make it worthwhile, right? And if you're A, getting the rent bumps, and B, you're able to execute, right? And then you have enough, and you're looking at sort of like your time horizon, you're saying, okay, look, we've got 3 years left on this node before we have to refinance. Or we've got X till, I mean, really it's the refinance problem. Do we have enough runway to do this, right? And if we can execute that, what is the NOI going to be? If you can answer all those questions affirmatively, then I would say, yeah, go for it, right? Because you will. So with cap rates rising, right, because of interest rates rising, it means that you have lost value on your asset, right? And absolutely. The only way to get the value back is to increase the NOI, right? Because as you guys probably remember, like, the way you calculate the value is you divide the NOI by the cap rate, right? So if the cap rate has gone up, then the NOI also has to go up to preserve the value. If you're in a position to be able to generate that NOI because your thesis was correct, then yeah, you should go for it. And if you have the ability to lean into it and do it faster, then do it faster. I mean, again, from the LP perspective, that is probably going to mean you're not going to get as much in the way of distributions in the short run, right? They may have to really preserve all that cash to put it into the renovation. But the end goal is, hey, when it comes time to refinance, we're going to have boosted that NOI. We're going to have created additional value. We then won't have to do a cash in refi when we refi this deal, or when we sell it, we'll be able to sell it for a decent valuation and at least get people's money back to them, maybe make a little profit. Maybe 3 years from now, it's a whole different market situation and interest rates are down, or whatever, the demand is back up for whatever the thing is, right? But I think you have to go through that thought process, and then I would say if those things all line up, then maybe the prudent thing to do is to just accelerate that program.
It's got to be. It's all a gamble at this point, right? Because again, if you let's just assume, and to your point, they have the cash, right? One option could be, you know what? Let's just keep it. Let's keep the dry powder. Let's survive to 25, as the saying is going, or maybe it's survive to 27 or whatever it is. Because again, there's still risks out there, right? There's all this inventory coming in multifamily. Maybe your rent bumps aren't going to be there. I mean, there's all kinds of unknown risks in the future, and with cap rates, it's just rising and values falling and debt. It's
you have to look at all these things, right? What market? I mean, the supply issue is another one, right? So if you're in one of those markets where a massive amount of supply has come on, you may not be able to get those rent bumps that you expect. Right? But if you're in a market where supply has been a little more muted, right? Then, so really, I mean, And this is where these operators are earning their money, right? I mean, earning their keep, I should say. You know what I mean?
The
Like
good
this,
ones, the good ones,
this
yes.
is where the rubber hits the road. Like they've got to make these decisions. It's not easy. Maybe the easier thing to do is just hoard the cash and hope for the best, or at least you've got the cash on hand 3 years from now
Yeah,
to make a capital call. You can just use the cash you've got,
that's what I'm thinking. Yep.
or like, the more it could be, the more prudent thing to do is actually do the slightly riskier thing, which is
Yeah,
put the gas
agreed. It could be. It's just,
on
I think there's a lot. Again, what is going to transpire is there were a lot of financial engineers who are just financial engineers and they are not operators. And let's be clear, they have almost no personal skin in the game. And my fear is a lot of them are just going to put it in the middle of the table, give it a shot, and then walk away if it blows up.
Yeah.
And that's the danger that I see coming for LPs. And we've been warning it for a year. So hopefully you're okay, because those capital calls are really distribution stopped 6 months ago. Capital calls. I'm getting notes from people saying, Michael, thank you for this, thank you for that. I just got my 5th capital call. Woo, getting rough out there.
I mean, listen, this is, I, I'm very sorry that a lot of people are in this position. I mean, really, it sucks. It really does. But you and I a couple of years ago,
we were laughed at. Yeah, we were laughed at.
Talking about the fact that like it's great when everything seems to be going well and people don't ask a lot of questions and everybody's making money and like nobody really thinks that hard about these things. And then when you say to people like, hey, you still need to think about the downside, they get very upset, right? And
yeah,
they get very angry.
They call you names. They're like, stop raining on my parade. You don't know what you're doing, boomer, blah, blah, blah.
Yeah.
I mean, listen, I had multiple 25, 26-year-olds who raising millions of dollars in the Valley call me a boomer. And I was out of touch. I'm like, you guys are going to lose. You guys are going to lose all these people's money. You don't even know what the hell you're doing.
I had, when I sold my portfolio in 2019, I was accused of trying to time the market.
Yeah,
right?
Me too.
Yeah, and it's kind of like crazy. Like, no, the people, I'm selling. I'm not timing the market.
I'm walking up to the register, baby.
Yeah, exactly. Timing the market is when you keep on holding on because maybe it's going to go up more. Maybe it's going to go up more, and I want more. I want more. I want more. The people who were like buying at the height were the ones who were timing the market, right? I was like, I'm not timing the market because it could still go up. I don't think it's going to go up, but it could. I'm taking that risk, right? So that you got to take the chips off the table when you can. But the larger point is when everybody around you is saying that this is a can't lose proposition,
I'm out.
that is when you have to be extra cautious. And that's kind of where we were in 21, 22, where interest rates went super low and all these new entrants piled in. People I'd never heard of before were out there raising millions of dollars, I was there scratching my head going, I can't find a single deal that works. And then there were these people out there who were like buying thousands of units a year who I'd never heard of before.
Yeah,
who were raising dollars, and every deal they did was conservative. We're conservative.
Yeah, we're conservative. That's such a BS story. It's going to come back to bite so many people. So many people are hanging on by their nails. We've already seen one catastrophe in Houston, 3,200 units, $100 million burned in 9 months. That is the tip of the iceberg. And at this point, you and I have said it before. It's already made. It's just a matter of time before the pain comes to the fruition. Folks, we're going to flip it over in video number 2 and talk about an opportunity that is coming. But Jonathan, before we do that, how can people find you?
Yeah, please come to apartmentinvestorsclub.com. You can grab my free download, or you can go to Apartment Investors Club on Facebook. And I also want to let everybody know that on my hotel deal, man, we have been really working hard on this hotel deal. We have a tiny little bit of extra space there on this deal. So if you want to get in on this deal, we want to talk about it. I'm really excited about it. Please reach out to me. You can email me or go to Two Bridges Asset Management and fill out our investor form and just stick a note in there that you want to talk about the hotel deal, and we'll get in touch with you as soon as possible.
Cool. Very cool.